Equity News on EquityAxis, your aerial perspective on stock market developments and the developments in the Zimbabwean economy. A splendid evening it is to you. I'm Ibn Abunda. Let's get on to business. Our news tonight: the Parliamentary Committee on Public Accounts today convened for the second week in a row. While Dr. John Mangunjika, the central bank governor, was being quizzed on the operations on the central bank with particular focus on the monetary policy statement which was released on the 20th of February 2019. Of note was questions asked with regards to the pension funds in light of the introduction of disparity between the local currency, which was then the bond, now the RTGS, against other currencies. Well, the EquityAxis team was on the ground. Let's have a listen.
We were told that there were bond notes or RTGS currency, whatever you want to call it. That was equal to the US dollar. We know that we had lost values up until 2008. So we started rebuilding based on US dollars. And when we protested that, but the two are not the same, we were told they are the same. And the banks were told, mix the two accounts, bond and whatever. Especially as we put money, and those who put money, we can see what they've bought: the buildings, the land, the vehicles. But we were now suddenly told on the 20th that the two are not the same and were never the same. And so we have to answer his question: has there been value preservation? What could have been done to preserve value?
The Parliamentary Committee also raised concern over the securitization of foreign loans against local minerals. Let's have a look.
So far we only have gold that we've signed.
So there's no other mineral?
Not yet.
My final question on this point is that securitization is a very legalistic, issue. It's a legalistic issue in the sense that when you securitize future earnings, you are in fact eating into the future. You are eating into the future. You've committed future income to present day indebtedness. And the person who controls any income, future or otherwise, is Parliament. So what is your legal instrument? What is the legal basis of securitization? Secondly, what is the legal basis of securitization outside Parliament? Aren't you supposed to comply with a certain law, which you have to tell me I don't know it? And also, don't you have to come to the owners of the money, who are Parliament, the controllers of the Consolidated Revenue Fund, and say, very well, in future? So the legalism and parliamentary approval. What is the legal basis of securitization?
Thank you, Chairman. It takes us back to what we discussed last time, that all the loans that are engaged or controlled by the Reserve Bank, they need to go through ministerial approval. They need to have a legal opinion of the Attorney General's office, and all those are done. And therefore, it means that what maybe don't happen was to advise Parliament by the minister, responsible ministers, to come to Parliament. But as far as we are concerned, the legal basis is that we have gone through the mandate of the Reserve Bank, which mandate is also enshrined in the Constitution of Zimbabwe, Section 317, where we are supposed to do what we are doing. And if the Parliament has not been advised of such borrowings, then it means we shall advise, as we said last week, the ministers to advise Parliament so that the oversight role will be enshrined in that.
Meanwhile, the Tobacco Industry and Marketing Board today released a weekly report for the week ending 8th of March 2019. According to the report, the number of new tobacco growers grew 25% to 42,000 farmers, while the aggregate number of registered tobacco farmers also scaled 45% to 171,000 farmers. Of note is the fact that earlier on this year, crop worth 600,000 was affected by a hailstorm, while the effects of the prevailing El Nino are yet to be assessed on the crop. Well, let's have a look at the performance of Zimbabwe with regards to our output over the years. coming from 2004, where we produced just about 10 million kilograms. In 2018, we produced a record high of just below 250 million kilograms in that regard. Tobacco is Zimbabwe's second largest forex earner, raking in about $1 billion in the year 2018. Still on tobacco, according to the meeting held today, the Parliamentary Committee on Public Accounts, Dr. Mangunjika says that the forex retention for the tobacco farmers has been increased from 30% to 50%, while also he highlighted that he expects the exchange rate between the RTGS and the dollar to strengthen in the forthcoming tobacco selling season, which is expected to commence later on in the month. Making progress, the dairy figures for the month of January are out, and output scaled 10.24% to 6.7 million liters. Let's have a quick look at our statistics so that we gain perspective in that regard. Well, the production for the month of January has scaled to 6.7 million liters, coming from 6.1 million liters recorded in January of 2018, against also a production of 5.5 million liters produced in January of 2017. Zimbabwe annually demands 120 million liters of milk. Well, our current output is at 70 million liters, while, of course, we demand 120, so that means we have a deficit of about 50 million liters. That leaves us with a deficit which then needs to be serviced by imports of $220 million. Of note is the fact that at our peak, between 1991 and 1992, we produced about 260 million liters of milk. And that, of course, the disparity between the current and the historic would be the fact that our national herd has dwindled from about 192,000 cattle to just 32,000 heads of cattle in that regard. So, of course, Zimbabwe would need to scale up its production as well as its herd in order to meet our demand in that sense. Also, in other news, the ZSE turnover for the month of February hits a 10-year high of 295.8. For discussion on these and other issues, I'm joined in studio by our resident chief analyst, Respect Quincy. Respect, good evening and welcome to the show.
Thank you, Eben. It's always my pleasure. Good evening, viewers.
Beautiful. Let's cut to the chase. Well, concerns they're being raised by the parliamentarians with regards to the fact that pensioners' funds have been eroded, due to the devaluation of the currency in that sense. We no longer have a situation of 1:1, but now we currently have a situation where we have got a 1:2.5. What is your thoughts? What is your take where that is concerned?
I've always been an advocate for a liberalized rate, and I believe most Zimbabweans were clamoring for either a liberalized rate or a shift towards back to re-dollarization. So the preferred position by the government was rather to liberalize the exchange rate and introduce a local currency, which of course the later part I'm not as much an advocate for. But this is the status quo that we have. I think when you're looking at the decimation of value through the liberalization of the exchange rate, we always have to resort to the opportunity cost. What could have been if we had not done so? Were we better off as an economy to maintain a 1:1, or would rather liberalize and, of course, subject our monies to the real forces of demand and supply? And so this is where you have to look, how you have to look at everything economics. You have to look at it from a cost-benefit analysis and an opportunity cost evaluation. So with regards to pension funds, pension funds are not exactly decimated by a liberalized exchange rate. Rather, in the long run, they might actually improve. What happens when you have a liberalized rate is the government is forced to behave. The government is forced to cushion, to print money at a very fair rate or at a more guarded rate than it is when you have a an exchange rate which is fixed, like what we were doing all these years. We just assumed that things are equal and we kept on printing paper without value. But now, in a liberalized market, you only print money knowing the implication to the exchange rate. So government will be forced going forward to now put its house in order, put the fiscal's position in order, turn back on money supply, and obviously improve the exchange rate. So in terms of pensions and whatnot, this is a body of assets, investment assets that pension fund managers are tasked to either preserve value or grow the value of the money that pensioners pay. So at the end of the day, you invest in different asset classes, either it's property, either it's money market, or it's equities or alternative investments. And I wouldn't want to believe that at the present moment there's many pension funds who are sitting in money, unhedged money, or money that is not earning them an interest. But I think if you then evaluate in terms of how much inflation has ticked in against the expected or the average market interest rates or yields from the market in either of those investments minus the stock market, I believe that exchange rate, that yield is negative. So that's where the loss is. But over time, if the economic fundamentals are improving, if inflation stabilizes, then we are likely to see a rebuild in the value of assets. And so, whereas we are saying the value of our local money, the local money lost value to the tune of 60% thereabout, in actual terms, when you invested in properties and whatnot, you might not be losing money at a very similar value, at a very similar rate.
Okay, let's talk about the confidence in that sense. The chair was running the Parliamentary Committee on Public Accounts was Honorable Tendai Biti, highlighted the fact that according to a report in 2009, pensioners lost value of about $5.8 billion.
Yes.
Then also he also did highlight certain losses in the insurance sector. Do you think that Zimbabwe could find itself back in a situation where there would be confidence again in terms of the insurance sector? Do you think also the public would still have confidence where the whole pensions structure is concerned going forward?
There has been a drastic loss of confidence in the banking sector and in the government in place since 2009. I guess the compromise which was brought about by the GNU brought a bit of comfort to the market in that it seems like people were favoring more of the arrangement that came through the GNU. So with the current government in place and being given reins from 2014 upwards, there's been a lot of excesses in terms of public management of funds management of public funds. And so there has not been confidence, and I don't think the public being beaten twice could still have any confidence left in the current government. But it's upon the government to now set themselves to rebuild the lost confidence, and they can do it by having a first approach in terms of reconsolidating the fiscus, showing clearly how the money is being managed, printed, and so forth, how revenue is being generated and utilized for. And the biggest thing is corruption in this government. There's been a lot of corruption accruing from the early 80s to date, and that system is rooted in the current government. And so there has to be a shift or a reform agenda which is deep and that cuts through all sectors. I think that can only restore the confidence that is not present in the current market.
Okay, let's move on to the other story that was discussed there, securitization of loans, with some parliamentarians feeling that Zimbabwe's future is being somewhat mortgaged.
I think given the choices that we have at hand, you wouldn't fault the governor or the current government for making such choices. But I think whenever possible, we should dig deeper to see where can we get the best value. Because when you securitize, or in fact, he refused to call it a securitization, but he said this is money that was taken on the terms that will push back or will pay back the loans in terms of receipts from gold sold. Either way, there's an interest component involved in that, and given the country risk, there's a huge or a higher premium associated with getting those funding from the international financial institutions. So I want to believe either way, it's there's a cost attached to it, and the cost is really steep. But all the same, are you going to sacrifice production? Are you going to just fold your hands in the interim just because if you securitize an asset, then you probably have to pay an interest component? So aggregately, I want to believe that action had to be taken. But I think all this, we are paying a cost for not being prudent in terms of how we manage our public funds. And this is the cost that Zimbabwe has been paying. So at the bottom of all this is a lack of proper management of public resources, which is the problem which government has to get back to address, so that we won't incur future costs associated with piecemeal funding that is meant to possibly push us through in the interim when we don't have any way to resort to.
Okay, making progress. We've got some stats released there by the Tobacco Industry as well as Marketing Board, highlighting that there's been an increase in the number of farmers across the board, new farmers scaling 25%, while the aggregate figure also scaling by about 45% to 171,000 in that sense. But at the same time, I've noticed the fact that last year we recorded a record high of 250 million roundabout of kilograms for the nation. How significant is this increase in terms of the numbers of farmers in that sense?
I think the numbers are encouraging. It shows that there's been an increased movement in terms of farmers resorting to pushing the tobacco crop, and judging by the percentage of growth at 25% year on year, it shows that we are really heading towards a better crop, a better hectare this year. I think it would have been more prudent as well for us if we could have got an evaluation of the hectarage under utilization. If we could get that figure, it could really help us in making a more fair evaluation. But all things being equal, this change or this movement in the number of growers upwards is a reflection of an expected higher yield in the current year. And rainfall patterns, although there was an expectation that they might be erratic in terms of, and negatively affecting other crops. For tobacco, I think so far it has been good, and the season is about to tick off, and we're likely to see better yields. Maybe not necessarily better yields, but a higher produce. Yields are a function of quality, and given the nature of the rainfall that's expected in the current, in the 2018 to 19 season, maybe the yields might be slightly lower than last year. But I believe on the net, we might have another crop which actually reaches a record high. As you have noted rightly, 2018 was a record high record high production volume since the birth of this country. Okay.
Moving forward, let's talk about the forex retention rate. The central bank governor today, before the Parliamentary Committee on Public Accounts, said that their forex retention is being scaled up from 30% to 50%. That's on the one hand. On the other hand, you have a situation where, as for the balance, it's having to be given back at a rate of 1:2.5, whereas on the black market, the rate is at about between 1:3.5 to 1:4. What effect would that have on the farmers as well as their interest in producing that particular product?
Yeah, of course, the actual what they get from the crop in terms of revenue is reduced. But then, I think if we want to look at it this way, when production, when the selling season starts, the exchange rate firms. When an exchange rate firms, it obviously reduces, it actually increases the variance to the rate which is prevailing on the black market. But what if that gap closes between the black market and the interbank market rate? So if that gap closes, then there won't be that outcry. Because that will be the clear reflection of what our currency is.
What are the
So
chances of that happening?
The rate is not fixed. It's wrong to say farmers will be getting at 2.5, as if there's a rate that is already set on the interbank market.
But
the rate has been there. It has been trading at that
But
place.
there hasn't been much of a variance.
Yes, but what if it improves? What if it falls? Okay. What if we say that cash flows on the interbank market improve to an extent that the black market won't have sufficient power to maintain those higher rates? So I think if we agreed that the market is being determined by market forces, then there might be an improvement. But I agree with you that all this has got an impact in terms of farmers' willingness to continue trading or to continue participating in the production of the crop. As long as there are going to be these issues to do with currency instability, then it reduces the allure of playing in that field. But I think it's also important to look at how the tobacco farming is structured. There's contract farming, and then there's communal farming. Contract farming dominates tobacco farming in Zimbabwe, and 85% of the value of tobacco produced in Zimbabwe is due to contract farmers.
So for the 15%, we're then likely to see the situation that we have with gold. Gold miners being dissatisfied with the retention and then resorting to side marketing. So with that 15%, looking at the fact that we're looking to increase output.
There's no side marketing in tobacco. There's no way. Tobacco is unlike gold, where you can actually move around to Mozambique with a handful of your stones or to put them somewhere funny. With tobacco, you really have got these bells, and either way or they have to be sold through the auction floors. So I don't think there's much in terms of impact, even if communal farmers decide to reduce their participation in the production of the crop. So 85% of the monies or the production within that sector is due from contract farmers, and contract farmers are being given 80% of their money in forex. So they're really covered. So I think communal farmers they've been exposed, but I don't think that it's much of an factor. They don't have as much options.
Okay.
Even the government is also not pushed to address much by increasing above the 50%, and they want side market. Once you do the crop, the next thing is you have to sell it, and you can only sell it on the auction floors.
Okay, then of course, in terms of the dairy, the figures are up 10.24% to 6.7 million liters. According to the stats we have here, this is actually our highest January in the past couple of years, of course. And while, of course, this is not the highest that we've actually achieved in the past recent periods, we also achieved 7.1 in October of last year, and we are here at 6.7 against the background, of course, that Zimbabwe demands 120 million liters of milk per year, with a deficit of 50. So that means our output is at about 70 million. How significant is this slight improvement in that sense?
Yeah, there's no defined trend in terms of how milk production has performed over the past 3 years, but I think it's important to just note that this is a decline from the previous 3 months that we're coming from. In fact, it's actually more than 4 months coming from August to date. It's actually the slowest level, but it's also a highest in terms of January production. But when you look at the prior 2 years as well, you find that there was no defined trend to say if you produce a higher figure in December, then your January will fall. So it doesn't give a very good picture in terms of, but it's a fair average if you are to consider the past 3 years on a like-on-like basis. If we can maintain such levels or even better, because over the past 3 years, we see that the first quarter usually production comes off. I think the trend is quite clear there. January levels, February to March, have not been that good over the past 3 years. So if the January 2019 momentum is maintained, maybe we might close in the gap, because the 50 million gap, that's where the problem that we have as a country in terms of our milk output deficit. So if we can maintain 6.7 and even better, then we might see a closing of the gap as the year progresses. But I think we're facing challenges. Production is not likely to remain at those higher levels due to other factors such as increased cost of production. I've had an engagement with one of the biggest dairy processors in the country. They were saying we're facing challenges with farmers telling us that we can no longer sustain producing at the current levels. Actually, we would rather slaughter the cows, because we are not longer able to give them what they require to keep on producing the required milk. So given the increase in cost,